Freddie.
Yep.
Keynes.
Hey, listen, party at the Fed.
Already?
20 minutes.
Lobby.
John Maynard Keynes.
F.A. Hayek.
Yeah, we're opposed.
We oppose each other philosophically.
In the same studio.
We've been going back and forth for a century.
I want to steer markets.
I want them set free. There's a boom and bust cycle and good reason to fear it. Play low interest rates.
It's the animal spirits. John Maynard Keynes wrote the book on modern macro. The man you need when the economy's off track. Depression, recession, now your question's in session. Have a seat and I'll school you in one simple lesson. Boom, 1929, the big crash. We didn't bounce back, economy's in the trash. Persistent unemployment, the result of sticky wages. Waiting for recovery, that's outrageous. I had a real plan, any fool can understand. The advice real simple, boost aggregate demand. CIG altogether gets to Y. Keep that total growing, watch the economy fly.
We've been going back and forth for a century.
I want to steer markets.
I want them set free. There's a boom and bust cycle and good reason to fear it. Play low interest rates.
It's the animal spirit. You see, it's all about spending. Hear the register cha-ching. Circular flow, the dough is everything. So if that flow is getting low, doesn't matter the reason. We need more government spending. Now it's stimulus season, so forget about saving. Get it straight out of your head. Like I said, in the long run, we're all dead.
Alright guys, welcome back to WolfPack Cryptos and MMGinvest. What a day. What a day. Well, first of all, Merry Christmas, everyone. It is Christmas Eve, and today was a half day or a shortened day of the stock market, and today's going to go down in history as they're going to call it something like Black Monday, Christmas Eve. Pretty much when everyone finally realized and capitulated that the top is probably in. Now today was an insane day with all of the news coming out and all of that. I will cover that in a second. I will talk about some TA for a minute, and then I will go into the news events and why the market is panicking and crashing and whatnot. Now, first of all, this is not financial advice. This is my personal opinion, although I tend to be right most of the time, if not always, about the major macro outlook. But consult your financial advisor. I am not your financial advisor. This is just an educational channel, and this is about trading. Learn to trade, have stops in place, emotions out. And once this video is uploaded, it's pretty much obsolete because everything's time sensitive. Alright, here's a weekly chart of the S&P 500. Here's 2009 again, all the way down here. And we're right here. Now, taking away the drawings, this looks scary. Now, this is what a correction looks like. This is what a correction looks like. Here's a correction. And these are pullbacks in a macro outlook for years over, years on end. But this time, is it going to be different? Well, this looks bad. This is the top. All right, guys. I've said it already. I called it 2 months ago. I think the top is in. And it's because of all the fundamentals and all the fissures and cracks across the entire global economy. All right, guys. And not just that, we've had the longest bull market in history, and everything's overvalued, overpriced, everything's inflated. It's a bubble. It's a credit-driven bubble by the Fed. And my previous video, I covered the Fed Funds FOMC hearing meeting, and the markets did not agree with Jerome Powell because he was not dovish enough. He didn't want to cut back on interest rate hikes for 2019. And the market knows that. They're not stupid. They know if they keep raising interest rates, what will happen is it'll pop the debt bubble, which is pretty much the entire Wall Street, all the corporations, everything, right? The entire financial sector, which is over 25% of the entire economy because we don't have industrial jobs and whatnot in the U.S. Now, what happened today? Let me go over this stuff. It's crazy. It's nuts. So Steve Mnuchin, the Treasury Secretary, you know, the guy who manages the finances and the debt of the nation, he calls the top banks, the top 6 banks, like JP Morgan, Citigroup, Bank of America, Goldman Sachs, all of them, and also calls the plunge protection team. Now, if that doesn't cause a panic, I don't know what will. Now, you see, the thing with calling the banks. Now, in 2008, we were hours away from the major banks in the United States becoming insolvent because there was a run on the money market funds, which would have been pretty much a run on the banks. A run on the banks means everyone wants their money out of the banks. The problem is they can't give you your money because the bank lost your money on the stock market. You have to understand, when you deposit money into the bank, what they do with that money is they either invest it in the stock market or they loan it out. And when the stock market starts crashing, people can't pay their loans back. And then the banks go bankrupt. It's where the word bankrupt comes from. And then people can't get their money. And then, but there's FDIC insurance, right? Up to $250,000. Yes, there is, but there's no like fund out there that insures every U.S. citizen's money in the bank. Are you crazy? No, there's no real like fund out there. There might be a little bit of money in it or something like that. But what pretty much would happen is the secretary, the treasury, will go to the Fed and they'll ask the Fed, hey, print some money, put some bonds out, sell some bonds, and the Fed will print money, give it to the banks, and then the banks will pay out or deposit into all of their depositors' bank accounts. And then the minute that happens, the dollar will literally tank, like lose like a large percentage of its value. And that is actually, like, I don't think that's ever worked in human history. What happens when that happens is pretty much hyperinflation. So you guys have to understand how this stuff works. Your money in the bank is the bank's liability because they take your money and they lend it out, or they put it in the stock market and buy stocks with it. Hence the bubble, the everything bubble. Now it's going to be a global catastrophe because everyone borrowed in dollars because the dollar is the world reserve currency, and then the Fed abused that power and pretty much printed endless money, right? And so did every other central bank. Had to follow the Fed all around the world after 2008, and here we are. All right, let's see what else is going on. So the plunge protection team. What's the plunge protection team? The plunge protection team is like, you know, another government ran like entity that comes in and they'll put in a bottom into the market, or they'll start buying up stocks and everything to keep the market from tanking. The problem with that is it's impossible. They can't really do it for too long, and they'll run out of money. Another thing they could do is they could the exchanges could liquidate everyone's shorts and pretty much they could stop people from shorting the market, which would help it from crashing as fast. But what they can't do is they can't stop people from selling, and that's what's going to happen in the end. What else did I post? This is my Instagram, by the way. Not only is today the worst Christmas Eve in U.S. stock market history, but this is now the worst December in the history of the S&P 500, which just slipped into official bear market territory, joining the Dow Transports, NASDAQ, and Russell 2000. I'll talk about the Russell 2000 and all that. This was a quote by Peter Schiff. Now, listen, guys, I'm like the only one guy out there who doesn't say that the stock market's going to crash every week. And I'm probably the only trader out there who actually called it, that the top was in, who has a track record of not being a constant perma-bear, calling it every week. Meaning, I actually was bullish until I saw evidence to not be, and I made the right call or prediction, okay? What else do we have going on? So the S&P crashed below its bear level of 2,300, the lowest since April 2017, ending the longest bull market in history. Correct. Bank stocks clobbered. Utilities, a lot of people like to hide in utilities, thinking they won't fall with the rest of the equity stocks, like the FANGs and whatnot, and the techs, and but they fell as well. It's another indication of the weakness and the panic. So, I mean, this is bad. The inflation stocks, even those were hit. Crypto soared, and so did gold, right? And like I've said in previous videos, cryptos and gold will probably be the only place you could hide. It's not going to be bonds, because if the entire government is bankrupt and can't pay out the entitlements and all the debt they owe the rest of the world, those bonds are not a safe haven asset. They teach you that in school. They teach you a lot of crap in school. So nothing says don't panic like saying I'm calling the plunge protection team tomorrow. I honestly think that's the type of event that's going to startle the markets. I mean, it's hilarious. I can't believe they said that. So here's a tweet by Trump. I caught it the first minute it came out, which is ironic. I was thinking I should check out and see what Trump's saying today. And here's going to be a very infamous tweet. The only problem our economy has is the Fed. They don't have a feel for the market. They don't understand necessary trade wars or strong dollars or even democratic shutdowns over borders. The Fed is like a powerful golfer who can't score because he has no touch. He can't putt. Well, you know, it's funny. This is the Donald Trump put. You know how there's the Alan Greenspan put and the central bankers put, and the put means, well, they're going to stop the market from crashing and they're going to come out with monetary policy to make the market go back up. Well, Trump is trying to do that with his tweets. Here's what Trump is doing. Trump took credit for the massive bull run in the stock market for the last 2 years. And he knew it was a bubble. But he needs to keep the confidence game going so he can get reelected and get his agenda done to try to bring back jobs to the United States. The problem is the bubble's popping, and the Fed kept raising interest rates, even though for months now Trump has been complaining about the Fed raising interest rates because he knew the Fed would pop their own bubble if they kept raising interest rates. So Trump is going to keep saying that this is the Fed, and the Fed popped, is making the stock market crash, this and that, which is sort of true. The problem is, it's an admission to the fact that the entire economy was a bubble, and it wasn't due to real economic growth. It was due to all of the monetary policy from the past 10 years. It was just a bubble. There wasn't real productivity. Things weren't really being built and done because the economy was strong and the free market was doing it. It was because of the cheap money. And what it does is it creates malinvestment. So all the growth that we had in the past 10 years of the economy was misallocation, was not real growth. It was growth, but it was fueled by money printing and artificially low interest rates. What that means is there's a bunch of companies out there operating and creating businesses and hiring people that shouldn't even exist. Or the market would have crashed them a long time ago, because you guys have to understand the free market, it only works if the strongest survive. If the weak companies survive, what it does is it creates a bigger crash down the road, and that's what's happening. I will have to make a separate video on that, explaining economics and free markets and how the weak companies and the weak banks and all of that has to die off. If it doesn't, it'll just keep metastasizing and destroying the underlying real economy, and it creates a fake economy, and then the freaking thing implodes one day, and that's what we're looking at right now. All right. So What a day. What a day. Markets panicked because of the liquidity issues with the banks and Steve Mnuchin calling them. And Trump also tweeted something that he was going to fire Jerome Powell, which is funny because he was the one who appointed him in the first place. I've never seen a president fire a Fed chairman, or maybe it has happened. I just don't know about it. But that's funny. So what's going to happen? What to do? What's going to happen? Well, I'm going to say and expect that the Federal Reserve is going to capitulate finally. They're going to come out in recent days and weeks. If this keeps falling, which it probably likely will until the Fed finally capitulates and says, all right, guys, no more rate hikes. And then they're going to have to say, all right, we're going to start going back to zero interest rates, or who knows, maybe they'll start talking about QE. Maybe they will first say, all right, no more rate hikes in 2019. Then they're going to say, all right, then they're going to start lowering the interest rate back to zero. And then they're going to eventually have to say, all right, the QE option is on the table. And as they say these things, the market will get more confidence and they'll think that the bubble will get reinflated and the market will keep going higher. Although the smart money and the smart investors know that it's not. I mean, and I know that it's not. This is what I believe, not financial advice, though. What I think will happen is the market will keep falling. It'll hit this major support area. This cluster over here. It'll fall all the way down to here to 2,000 on the S&P 500. On the Dow, it's it's going to look a little different. Well, let's just look at the S&P as a good barometer here. Here's 2009. So the markets, this is when the top was supposed to be in. It was supposed to be in 2016, as soon as the Federal Reserve started raising interest rates by a 0.25 percentage point. And but then it kept going higher, and then Trump was elected right here, and then it went off into a blow-off top, then a broadening top, Dow theory, and then boom, we just had a crash. So we're probably gonna give back all of the gains from the Trump euphoria trade right after his election. And I have a feeling if this major support starts breaking, then the Fed is finally going to capitulate, and the market will have some sort of rebound or a bounce back up to the upside. And eventually that will fail as well, and they'll start selling off as you start hearing that corporations' earnings are bad. The fundamentals start really deteriorating. Banks start going under. Some crazy black swan events start happening, and there you go. So, this recession, this bear market, and economic collapse, that's what it's really going to turn into, is probably going to take some time to play out. I don't know how long it's going to play out. I mean, it could happen fully within a few months or 6 months, or it could take a couple of years for it to play out. I don't know. All I do know is I want to be prepared financially. First of all, that's the first thing you should do, because gold is starting to rally and take off like a rocket. And second of all, you want to get other things in order. Pretty much prepare for like a hurricane or a zombie apocalypse, something like that. Because when, once we enter hyperinflation, go look up on YouTube, videos of other countries who've just recently gone through it. And you know what I'm talking about. So, yeah, like I said, guys, I've been saying for almost 2 months now, the top is in. As soon as this happened, I knew the top was in, and the top is in. All right, so we know what to do. We know what's going to happen. How long will this play out? How much tricks can Trump pull out of his hat? How much credibility does the Federal Reserve even have? Because one, it looks like the president and the government is pretty much going to force the Federal Reserve to do what they want. And everyone knows what the federal government will do in the end. Federal governments always spend more money than they have. And then what they will do is debase the currency and create hyperinflation. That's what every government does. Because every government is a parasite. All right? They promise free stuff, welfare, and perpetual warfare. Although I'll give Trump credit, he is pulling out of the Middle East, which is very good. We're going to have to. It's kind of like the Roman Empire. Roman Empire expanded across like Europe, went into Africa, everywhere. Eventually, they had to pull everything back because they went into debt, and then they started clipping their coins, and then they went into massive hyperinflation themselves, and that's how the Roman Empire collapsed, which is exactly the same way the U.S. is going down. If you guys want to see a great documentary, highly recommended, go to Mike Maloney on YouTube. He just made a great video on the similarities between the United States and the Roman Empire, how it collapsed. It's like a cartoon, really well done, really good, worth your time. It's enjoyable as well. All right, let's take a look at other things. I mean, Dow Jones looks just like the S&P 500. US dollar is actually falling. Very interesting. So the knee-jerk reaction is always to sell stocks and go into cash in the dollar. Yet the dollar did not rally today, while the Dow Jones fell 650 points, something like that. And 650 points is a lot in one day. And especially after the fact that we've been falling 400, 500 points, 800 points to one day. Something like it's a cascading effect now, right? It's complete panic. And the fact that the dollar didn't rally shows that people are starting to wake up to the fact that the Federal Reserve is going to be forced to do QE, quantitative easing, and to lower interest rates again, meaning that the dollar is going to take a huge hit. Like, you could wake up, like, over the week, and they're going to do it over the weekend. You're going to wake up Monday, and all of a sudden, your dollar is going to be worth, like, 30% less than the week prior. Meaning, if you go to work, it's like your boss saying, yeah, we're going to have to take a 30% cut from your paycheck. I mean, that's enough for most people to, like, lose their homes. Like, it's going to get ugly, all right? So, the 10-year yield, it's been falling. Very interesting. I think investors are starting to wake up to the reality that the Fed is stuck and they have nothing, they can't do anything besides lower interest rates and print more money to keep the bubble artificially inflated. But as people wake up, I mean, they're going to buy gold because they know that the end game is everything's going to blow up, including the dollar. Here's a weekly chart of gold. Check this out. This is looking great, guys. It's looking like the bottom was actually in January of 2016 or December 2015. Ironically, December of 2015 was the first Federal Reserve rate hike. That's when they started their tightening cycle. And that was the end of zero interest rates and the QE money printing. Now, since then, gold has been rising, right? Steadily but surely. And I'm telling you guys, once gold gets past 13, I would say 1,380, there's no stopping gold. It's going to all-time highs. And right now, the mining stocks are just destroyed. Now, the price of gold is going higher, but that doesn't mean that the mining stocks aren't at all-time lows, like in the past 10 years, because they are. And this would be the biggest opportunity ever, in my opinion. That's what I am personally doing. And then we're going to see these moving averages cross my blue equilibrium line, which will sort of be a golden cross on the weekly here. And that's all she wrote. Full-blown bull market. Now, everyone's wondering, the MMGinvest, right? My website's coming online soon. Listen, I'm shooting for the first of next month, the first day of 2019 for tax purposes, okay? So that's when I'm going to launch my newsletter, my research report and journal on precious metals, economics, and all of that for the MMGinvest private membership and group. And that will, the first day of 2019, all right? That's when I have to do it because of tax reasons. And it's not that far away. Today's the 24th, all right? And the product's going to pay for itself, believe you me. I'm not going to ask for much money. It's worth, I don't know. I haven't decided how much I'm going to price it at because it's worth a lot. But I'm not going to charge that much because a lot of people, I understand a lot of people don't have too much money. I'm going to make it either way. I'm good. So, yeah, I'll talk more about that in the coming days and coming videos. So stay tuned, all right? Well, the next video, I will cover the fundamentals and more of the news. I just want to keep you guys updated on current events and right now what's going on. I was looking at Google Trends. This is the past 12 months on YouTube searches. YouTube searches, stock market crash is breaking out. People are starting to wake up to the fact that the stock market is crashing. Let's go to web searches. And web searches is breaking out. Check that out for the past 12 months. So the problem with this is once too many people become panicky and start freaking out and start realizing that the stock market is crashing and we're going into another recession, then you're going to see it as a self-fulfilling prophecy, and the stock market is going to continue to crash as people call their brokers and they're like, hey, pull me out, pull me out. And it's a self-fulfilling prophecy, and then the con game, the confidence game, is over. So that's why Trump is freaking out and tweeting, and he's threatening the Federal Reserve, like, listen, you guys need to capitulate now, because if you do it later, it might be too late. And of course, Trump's not going to get reelected if we fall into a recession. That's just the fact, all right, guys? And but I'm pretty confident he's not going to get reelected, and we're going into recession. But it's not going to be a recession. This is it. This is the big one. This is going to be a global financial collapse, the worst the world has ever seen. That'll change the rest of everyone's life for a very long time. The world's not going to be the same after this for a very long time. And it's scary. I know. All right? Quick note, the FANG stocks, I mean, they look just getting clobbered. A disclaimer, I am short FANGs. I'm short Tesla. I'm the Russell 2000. Russell 2000, 2,000 small cap companies, domestic companies for the U.S. This looks, look at this. This is freaking terrible. Now it's on support, right? Major support right here around this area. And let's hope that holds. That's another reason why the Fed may be holding off, and they're hoping that we get a decent bounce to buy some more time, right? And then it'll trade sideways maybe. So I'll keep you guys updated, but this is not financial advice though. I could take off my shorts, and I also have stops in place. I'll get stopped out if we get a crazy bounce or a rebound. Back up towards the upside, right? Not a rebound, but a big solid bounce. I'll get stopped out. So you have to know how to trade. You can't just short, and do not use leverage if you don't know what you're doing. You will get wrecked. Here's the Dow Jones transports. All right, so transports, shipping, railways, you know, things being transported, goods and the goods in the economy. It's looking horrendous, just like the Russell 2000. Another reason, another indicator was FedEx. FedEx, for the first time, they're seeing a slowdown in shipping of goods, things being bought, especially prior to Christmas. That's a huge, huge red flag that the economy is slowing down, the real economy. All right, and then there's a bunch of other things. I'll go into that into a separate video. All right, guys, I want to keep this video shorter. If you enjoyed this video, found it informative, thumbs up. Please share it. Facebook, Instagram, or not Instagram, Telegram, and Twitter. Share my videos. I appreciate it. I will show you guys my YouTube analytics for the end of the year. I appreciate you guys. You guys are like the best subscribers and followers ever. My stats are like top 1% of YouTube for likes versus dislikes and whatnot. Also, check out all the links below my video. Join the free Telegram groups. Listen, this is the newsroom of WolfPack Cryptos. I post a lot of things in here about the economy and cryptos. And there's the MMGinvest group that's geared towards precious metals and the economy as well. But we don't really talk too much about cryptos. If you're not into cryptos, that's fine. We don't judge. And then, yeah, there's the free room of WolfPack Cryptos. And then there's the private membership. Everything's tagged above in the free Telegram groups. All right, you can download the app for free on your phone and computer. All right, guys, leave in the comment section what you think, and I will answer your questions or your thoughts if I find them interesting. And there you go. Also, here's silver. Look, silver's gonna break out, guys. It's definitely gonna break above 15, and it's gonna do it soon. I did forget to look at platinum, palladium. That thing is in a massive bull market. And you know what? I'll do that on another separate video. Alright, guys. Until next time.